Good morning. Today is Thursday, June 29. The time right now in Singapore is 11:14 in the morning. And overnight, we have a little bit of activity. Basically, we have the major central bankers gathering in a forum, and they were talking about their monetary policy going forward. And most of them, in fact, almost all of them, came out very hawkish, meaning to say that interest rates are likely to continue to be higher for longer. Then, of course, the Bank of Japan governor also came in to mention that the yen has been falling too fast, and he hinted that there may be some kind of intervention if the yen continue to fall. So this was the background as to what the market was basing on yesterday night. And because of the hawkish view by the Fed chairman, and in equity markets, we see that the equities in the US actually pull back a little bit. In the chart in front of you, there is this 4 hours time frame of the Dow Jones. We can see Dow Jones actually eases from the Tuesday high, and Tuesday we see that the market basically has a rebound, and the high traded was 33,975, and last night we saw the market pulling back to a low of 33,763.5. So if this continues, I think there will be a extension of this rally going forward to ideally 34,100 to 34,215 levels. And once that is done, there is the possibility the market will do a larger degree pullback below the 33,610 that we saw this week. So this is the background, and I think the market right now is in the correction phase, especially for the Dow Jones. While in the tech stocks led by the mega cap, we see that the Apple right now valuation is hovering on just under $3 trillion, which is an insane amount of valuation. So there is talks that the market may have already peaked, but that has not been confirmed by what we can see on the chart here. In the S&P 500, we saw that although we have a little bit of a pullback, but not before the market went to a marginal high relative to Tuesday, with a high in the S&P 500 at 4,390. So we can see that there is still that idea that the market wants to go higher. But I also believe that there is still a corrective pattern, and very likely we will see another move lower below the 4,328 that we saw at the beginning of the week itself. So do watch out for another pullback, ideally towards the 4,240 to 4,270 levels. Okay. In the Nasdaq itself, Nasdaq has been very, very firm. Again, very similar to the S&P 500. We have a marginal high at 15,051 overnight, and this structure here does suggest that we may see another pullback, ideally to 14,300 to 14,450 levels. And from there, ideally, the market can find a base for them to actually see if they want to take out the high here at 15,285. So let's watch out for this corrective pattern to finish first. In Asia, we can see that the Nikkei continued to charge higher this morning. We have a high at 33,528, but this high is nowhere near the high that we saw last week, at the beginning of the week at 33,773. So there was an attempt to rally, but if the market in the morning session has this signal, in the afternoon section, if we do not have another high beyond 33,528, then there is a very good chance it might pull back again. And if it does pull back, the market has a tendency to pull back to below the most recent low here that we see at 32,607. So it's going to be probably going to be a marginal low. It's not going to be a major crash, because I think the market right now is in the mood whereby I think it is looking to correct its excessive move that we have seen throughout the month itself. So if we do get a pullback in the Nikkei, the target will be at 32,000 to 31,700 range. So this will be a minor range in which to look for the pullback. Okay. And over in Hong Kong, we can still see that the Hong Kong market has reversed direction, although we see a nascent rally attempt from a low of 18,767 to a most recent high on Tuesday at 19,226. Now the market is trading at 18,912. So we can see the market is probably going back into this bracket of prices one more time, and that bracket of prices represents an area of potential demand, and those levels are 18,500 to 18,850. So let's watch out for another dip into this bracket of prices before we can see any kind of robust buying accumulation going on. Over in the mainland equity index, we have the CSI 300. Prices are also mimicking what we are seeing in the Hang Seng. Prices has since dipped back from the more recent high on Tuesday at 3,851. Currently is trading at 3,819. So let's watch if this market can actually hold up. We are not very far away from the low that we saw at the beginning of the week. We have the beginning of the week, we have a low at 3,801. So this bracket of prices anywhere between 3,008 to 3,760 does represent a very low risk trade setup potential here. In energy prices, we are still seeing the volatility playing out in energy markets. Yesterday, we saw the market dipping below the more recent low here at $67.32 to $67.01. Now, we can see the $67 has come back so many times. I mentioned this triple bottom here. So we can see triple bottoms are basically a pattern that suggests that the overall pattern looks to be a rounding bottom getting ready to go higher. So if that is the case, which we saw yesterday, market actually rallied from $67.01 all the way to just under $70 to a high of $69.68. And this is building the case for maybe perhaps an extended run towards the $72.68 high that we see, possibly into the $72 or $73 to $74 range. Okay, so I think do not expect a major run in energy prices because of fundamental reason there. The global economy is slowing down, and let's see what happens. Okay, and in precious metal, we can see precious metal continuing to weaken as we are speaking. Market is coming down to test last night's low. Last night we have a low here at 1,902.88, and as we are speaking, the market right now is at 1,903 and 30 cents. So it's very likely that the bottom is still not in place for gold, and if this extend lower, there is a possibility market may actually go a lot lower below 1900 towards perhaps $1,836 to $1,864. So there is a big drop here, about maybe another $40 before the market can find some kind of technical support. So let's watch out for this extended move here. But we are getting close towards the end of the month itself, which I think somewhere between now until Friday closing, the market may actually hit a bottom. Ideally, the market close at the low of the month itself before we see a reversal going into the month of July. That could possibly be the one that may actually happens. Over in silver market, silver is a lot stronger. Yesterday, we did see a pullback from $23.10 all the way to $22.56, and this bracket of prices actually held. This level is $22.50 to $22.60 level. So we actually hit the bottom with a reversal pattern. So this actually looks good for the prospect of silver having bottom here and maybe going even higher beyond $23.10. And if this actually pans out, this could actually happen next. Okay, we can see a three-wave rally. And if that's the case, maybe we can see $23.50 at the minimum. Okay, so do watch out for that extended run. In the dollar index itself, you see dollar index is still currently going higher on the back of a very hawkish Fed chairman's comment, which we already knew last week when he was testifying in front of Congress. He has maintained his hawkish outlook, but in yesterday's forum, he actually did not rule out the possibility of a consecutive 2 rate hikes going into the next FOMC, which will happen on July 25th, 26th. And of course, August is a break. They'll come back again and meet in September. So if the Fed chairman is hinting us, he's maybe suggesting that going into July, the next FOMC meeting on the 26th, there will be a quarter-point hike followed by another quarter-point hike in September. So this is actually underpinning the value of the dollar. We can see that the dollar index is rebounding, and I think it has already taken out the high that we saw here at 102.79 and is en route to test the 103.30 to 103.60 levels. So this is seen as a technical rebound, and let's watch what happens once the market gets there. Okay, now in the major currency pairs, we can see that the euro is coming back down, very similar, but in a conversely opposite mirror image of what we see in the dollar index. The euro dollar actually hit a high of 109.77. In a potential three-way pullback, you may actually see prices which is coming down right now to actually go below 108.44, perhaps heading into 108, even to as low as 107.70. So this bracket of prices is actually my termination point for this run here. Okay, over in sterling actually dipped a little bit lower than I expected. Market actually went below my ideal trading range, buying range of 126.5 to 126.85 to a low of 126.07. And like what we see in the oil, in the silver market, the market actually hit the low here at 126.07 and it end up as a reversal pattern. Now this reversal pattern here could be instrumental in telling us the market may have actually overshot and hit a bottom here, and it's getting ready to rally. And if we see a very robust rally beyond 128.5, then the market could be en route to the test the 130 even levels. So that is still within the range of possibilities here. Aussie has also overshot a little bit. Market actually dipped from 0.69 all the way to just under 0.66 with a low at 0.6595 this morning, and it's getting ready to perhaps do a extension of this rally here. But so far there's no confirmation in terms of the reversal signal. There's no clear-cut reversal signal that we saw, unlike what we saw in the sterling market. So right now we are beginning to have the idea that if you're already short, you should want to get up now, just in case the market do stage a very robust rally. Okay, in the dollar Canadian, we can see that the rebound in the dollar CAC has already been confirmed, because after all the market has finished a 5-wave decline, and this could be the first leg of a 3-wave rally here. So the market have a high of 132.77 overnight, and if we are right, market may actually pull back ideally to 131.80 to 132 even, for us to actually anchor in and buy for the next leg of a 3-wave rally towards the 133.20 to 133.90 levels. So this could be a short-term rally that we are seeing in the dollar Canadian. Now dollar yen is a different creature as always. The market actually went to a marginal high of 144.62 overnight, and now this is where the danger lies, because we already hear from officials in Japan, from the finance ministry, from the governor of the Bank of Japan, that the rate in which the yen is falling is too fast and it is undesirable, and they allude to the idea that market may this yen may be supported in the near future. So market analysts are looking at the price range and say anywhere between 145 to 150. There is a very high risk that the Bank of Japan may actually come in to intervene by selling the dollar and buying the yen, which they did last October. Over a 3-month period, they actually managed to get a price, the exchange rate for dollar yen from 152 all the way down to 127. So that's a big move here. So if we see the Bank of Japan coming in to intervene, we could get a move very similar to what we saw last October. So do watch out. If you are really long, you want to get out now, and if you are getting ready, if you want to jump in to buy some more, I think that is a ill advice. And on the other hand, if you are getting ready to short this market, you may be a little bit too early. So if you are looking to get into the market on the short side, wait for confirmation. We want to see a convincing candle bar to tell us that the big boys are in the market. So until they do not sell this dollar yet. Okay. Over in crypto, we can see that crypto is right now in a consolidation pattern. The rise from 24,785, 756 all the way to 31,458 is already confirmed, has already confirmed that the bias is to the upside right now, and this pullback from 31,458 is basically seen as a technical pullback, and ideally we want to see this market grind a little bit lower, ideally to 29,150 to $29,500, and that will be a much more comfortable level to actually anchor a long position, because so far the pullback from $31,458 is really corrective nature, and that gives rise to the idea that the next leg is to the upside and very, very high, because if this is the first leg, at the minimum we could get a same equality move, meaning to say you take the value of 31,458 minus 24,756, and you extrapolate from whatever the low managed to be formed here, and that is telling us the market has a potential at least $5,000 move going forward, maybe even more. So do watch out for this buying opportunity, because this is as clear cut as we can see. In the meantime, that's all I have for you. I'll come back to you tomorrow with another update. Bye bye. Take care.